Hey, it's Brant from Trade Guild, and it is the 26th of February 2008, and it's been a while since I've done a video. We've been working on some things with myself and David from Trading to Win, some member services and stuff, but we're back, and hopefully the videos will be a little bit more consistent, and we'll get a lot more of them out there for you. So we're looking at the spiders right now, and as the market had broken down out of this top formation that was going on the end of last year, it's pretty much been a sideways trendless market as this triangle over here has developed. So it's made it very tough for a lot of people to make money because it's just very volatile, and at the same time, it's a sideways market. So there's no real trend there. But everybody's been watching this triangle, which is a continuation pattern, which means typically it would continue the trend that preceded it, which is a downtrend. So, we're getting towards the apex of this thing where you'd expect to see a breakout. And on Friday, I'm going to go ahead and switch to a 5-minute chart. On Friday, we actually got a breakdown over here below that lower trend line of the triangle. There's the point. And it looked like it was going to close down there. And if that had happened, we would probably see the next leg down in the market, as a lot of traders would have probably gone ahead and just sold out their positions or gone short. And, I don't know if you want to call it the plunge protection team or whoever, but, coincidentally, they, released this news about AMBAC possibly being saved by a consortium of banks, and it just drove the market straight up like a rocket about a half an hour before the close. Kind of shady in my opinion, but whatever. If somebody does that in private life and it doesn't come from the government or whatever, that's manipulation. You go to jail. But I don't know. We'll leave it at that. Anyway, a lot of people got short over here on this breakdown of this triangle, so it was fuel for the fire when this was announced. Went up like a rocket. Those shorts had to cover. And then, on Monday, we were kind of drifting along in here a little bit. And towards, the later part of the afternoon, let's see what happened. I guess MBI and AMBAC were both confirmed to have AAA ratings from S&P, Standard & Poor's. So anyway, we got another little rocket right out of that triangle. So we have an upside breakout at this point, and you can see, I think I pointed this out too on Monday. There's a little flag right over here, which is a bull flag, and that's a continuation pattern. And then, as things developed this morning, we had a little pullback in the morning, and guess what? We got, another little flag over here. So, and now, even today, this afternoon, we have what looks like another little flag. So it looks like maybe this market's got some more upside to it. A couple things we were talking about on the blog in the last couple days and this morning. First of all, on Friday, I said, let me go back to a daily chart. On Friday, I said that beware of triangles, that they have false breakouts, and when they break out falsely, you typically get a fast move in the other direction. So we had that false breakout over here, and we got a pretty fast move in the other direction. So that's one thing we want to watch. Now, is it possible that this move over here is also a false breakout or a false move? Yes, that's possible, and we'll see what happens with that. We've got a little bit of resistance over here in this level, and I was talking about resistance this morning coming into play around the 50-day moving average, which is in yellow here, and that's pretty much exactly where we hit at 139 is the number I mentioned, and that's pretty much where we hit there. There looks like there's pretty good resistance in here at this 140 level, so I think 140 may be a key area, and see what happens at that area. Let me show you on a little bit cleaner chart here. We'll get out a trend line real quick and draw in 140. You can see over here this, I don't know why it's shaking around like that. Anyway, over here you can see that we have an area that used to be supports, now resistance. That's about that 140 level. So I think that's probably where it's going to come down, if it does come down, and we'll see what happens in that area. I'm still suspicious of this market. A lot of bad stuff has come out even today, and the market has just kind of whistled right past it. which is very bullish, but it also raises some suspicions in my mind anyway. So we talked about AMBAC, catching the shorts off guard there. And let me just clean up this chart real quick. And a couple things we were talking about this morning on the tag board at Trade Guild. It's like a chat. We're talking about a couple levels that this is today over here, 4 p.m. yesterday and today. So a couple levels we were talking about. I think, this morning around 10:40 a.m., which let me pull up my pointer, is right over here. And I was talking about the 137.20 level being, I think exactly what I said or something to that effect, was that if we break out above 137.20, it's going to set up a rally, which we saw this rally over here. And that's when I said something about February 4th is acting as gap resistance. And I'm going to go ahead and show you what February 4th, what I was talking about there. And here is an hourly chart. Here's that gap resistance that it was running into a little bit there this morning. And then we said that 139 was probably going to be the next level of solid resistance, and that's pretty much where we hit today. So, the spiders are not acting all that out of character for what they're doing. It's pretty predictable little rallies and consolidations, very orderly thus far. But like I said, I still have my doubts about it. Something else that we were talking about is MDR, and we mentioned that this morning. Let me go ahead and pull up a chart of it. And this is going to be a intraday chart, 5-minute. And MDR, we talked about, let's see, what time was it this morning? Around 11 a.m. I said there's some resistance near 54, and that I thought this was probably going to be a good short for a buck or two around 11 a.m. And here around 12 p.m., you see we never quite made it up to 54. It's stalled out there around 52 and a quarter or so. And, I had a little short there. It was good for a buck or so. It's about what we were kind of figuring. We looked at SMH this morning, and that also has been in a triangle. I'm going to show you on a daily chart. Here's the triangle, and around 11:45, I think, I said, watch out, SMH is getting ready to break out. And it did break out, and it's formed this little bull flag since then. So I would assume that we'll probably see a little bit more upside here. A little bit nasty there towards the close, that volume there. We'll have to keep an eye on that. But as far as the price pattern itself goes, if we get a breakout above this point right here, we could see another rally about the same as this one, 28.60 to 29.60, maybe a buck or so, which would put the semiconductors in a nice confirmed breakout, because right now where we sit is not very, it's not a very stable confirmation for a breakout of that magnitude. So I'd hold off on any real big bets until we see something a little bit more stable. And again, we're going to run into resistance on the semis right over here. This level is, 31 bucks, 30.90. So there's not a whole lot of upside until we hit that resistance. So the way the market's acting, I'm just very suspicious right now of longs. And I've got a lot of short positions on. It might be partly I'm trying to justify it in my head. I don't know. But just, the economic data that came out today, the inflationary trends, the market's ability to surprise recently, it just keeps me very much on the defensive. And the semis anyway, look like maybe there's some opportunities in there. Just keep an eye on that one. We also talked about POT today, POT. And I mentioned that we have a little rising wedge going on here in the daily chart. Rising wedge is actually a bearish pattern. It's kind of, winds up like a spring, this tension. Typically they break down and then they retrace their base. So you might see a move from, it sounds pretty big, but from 160 down to 130 or so. Now, we haven't got there yet.